This is the big five central bank balance sheets. I love looking at this chart here because it tells me where we are headed. Biggest spike ever in history in the increase of the balance sheets of the Federal Reserve, the Bank of England, and so on. And that was nothing compared to what happened over the next few years. They have increased their balance sheets to new heights, and there is absolutely no way that they'll be able to bring this down. What people don't understand, I'm gonna apologize to everybody who has heard me say this frequently, but there are always comments about it. In order to manipulate interest rates and keep them down, central banks have to get into what's called open market operations, and that is printing money. It is a fact. Showing you the Federal Reserve's own website. They print money to keep interest rates down. So, how will they ever keep interest rates down and bring the balance sheets down at the same time? It's impossible. It is literally impossible. Something has to give. And surely, if they keep printing money, they'll continue to devalue the currency, eventually into a hyperinflation. Looking at the VIX, when you see the VIX index, it's supposed to represent volatility, right? Well, today that isn't the case. You can see that with everything that's happening in the news right now, like as in yesterday and today. We should have the VIX spiking up dramatically. We should have the stock markets falling in concern that we're about to embark on one hell of a stormy ride. But that's not the case. Look out into the ocean. Completely flat. Everything's just fine. Nothing to worry about. It doesn't make sense. This is a fraudulent indicator. The average rent, to change gears here, the average rent in high-end apartments in the 30 largest U.S. cities, right at the, what I would call the top of the list, but here we have it as the bottom. Manhattan, $4,400. San Francisco, $4,100. Boston, surprisingly to me here, that's at $3,500. Brooklyn, Los Angeles, San Jose, Washington, and Chicago. All in the top of the list. Incredibly high rents that people are paying today. They can't buy a house, they can't afford it, too much debt, bad credit, and yet rents are skyrocketing. The vacancy rates are dropping in many cities, and this is a disaster for those individuals who want to be able to live somewhere and can't. Now, getting into the wealth disparity, this has been a big issue, particularly since the financial crisis. Even though people have got into more debt, more of the same trouble, they had this opportunity to deleverage throughout 2009 and onward. Instead, what do? They just take on more debt. They fall into the same traps over and over again. And here you have the distribution of wealth. I'm going to cover it quickly. Some of these charts are outdated a little bit, but it's actually worse today, so the point is definitely valid. Looking at the top 10%, they have 80% of the wealth. The top 10% have 80% of the wealth. That's something that people need to understand here. It's not just the top 1%. I mean, look at it for what it is. It's the top 10. So the average person, 80% of the people, you walk down on the street and see 8 out of 10 people, they've got nothing. Let me reiterate that. 80% of the people have nothing. 8 out of 10 people. I think I said that right. Okay, moving on. U.S. net wealth shares held by, bottom 90%, a declining factor since the 80s up until today. Why? Savings has been going down. People have been accumulating more debt. There has been more risk taking on the part of individuals, and it has not paid off. There's more people that have been engaging in different types of gambling. They've been burned over and over throughout all of the different booms that have taken place, whether it's a dot-com boom or the financial crisis and everything else, taking more and more and more and more risk and being burned by that. And we can see that this has been the case ever since. The top 0.1% have been increasing their wealth dramatically as the years have been going on. They own it all. Those top 0.1% are not the average individual down the street who might be driving that Mercedes-Benz or even a Ferrari. We're talking about the top 0.1%. These are the elite individuals, financially anyway. And they control everything. They control the politicians. They control the financiers and everybody else that controls the media and decides what you think. Looking at inequality in different countries, well, the US has the highest inequality according to this chart here. You have UK high up on that list. Areas of Western Europe are up there as well. And at the very opposite end of the spectrum, Iceland, Norway, Denmark, Finland are some of the top countries here. Doesn't necessarily mean that one country is better than another. It just means we have some serious problems with inequality. Percent of children earning more than their parents at the same age. I thought this was interesting because it's been declining as time goes on. Now, I think it's in real terms. That's the issue here. If you look at, let's say, depending how old you are, parents' generation, grandparents' generation, you will find that the average person nominally might make more money. Okay, because let's say back in the 60s or 70s, your annual wage, I'll make something up here, $10,000, right? If you're making $10,000, you could buy a house, you could buy a car, you can have one person working in the family, everything was just fine. Now today, you might be making $50,000, but $50,000 doesn't buy you anything. You got to have two people in the house working, you're being taxed heavily, and you're unable to make ends meet. That's just the way it is today. So they may be making more today, but not in real terms. Okay, much more taxation, everything's much more expensive, and people don't have the same sense of wealth that they once did. Average income for 3 income groups, top 1% of earners. You could see this line right here. I actually found this chart to be quite funny, going back from the 70s up until today. But what about the bottom 90 and the bottom 50%? Where are they? Well, if you look very closely, you'll see 2 lines that are barely visible. That's basically everybody else. From 1970 to 2014, the average U.S. income grew 77%, but almost all of those gains went to those in the top 1% of earners. The rich get rich, the poor get poor. All right. And last but not least, Ford, a company who said, don't worry, everything's going to be fine. We've restructured our company and this and that. Well, their F-150 model, which was going to be their flagship, which is going to be the reason why this company did well to the future, going to stop going into the sedans. They're going to be going into trucks instead. That's where the business is going. Well, they had to lay off thousands of people, but they say it's just temporary. Maybe it is. We'll have to see. Looks like there was an issue at one of the plants, and as a result, all of these people had to be just laid off temporarily. Now, it could be part of a bigger picture, and they don't want to, have any alarms going off. Maybe. I'm going to keep my eyes on this definitely. Now, what I see with the car companies is that a lot of this is going offshore, cheaper labor, cheaper parts. Everything needs to be cheap, cheap, cheap. And you don't really need to worry about, the economy at home. Why bother? When you can make more profit by going overseas, more profit, corporate profit, that means better for the shareholders. That means more people buying the stock. That means the few at the top, those in the 0.001 category, they are the ones who are going to do just fine. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you got to do is go over to Amazon. There's a link in the description of this video. If you click over there, it will bring you to where you can actually look through the pages of these books to see if you like them. Take care.